Welcome to TradeTheMBI.com. This is John. This report is for the 23rd, and made new lows, slightly higher high though, but still finished pretty close to about the same location as before. The breakdown from the magenta on the MBI here that we're seeing with the red leading was always the weakness case. It was just a matter of when the pivot here of magenta a little bit lower would go. And everything was going in favor of a decent push, except for the fact that once the midterm buyers then started to roll over, you really didn't have any strength from short-term buyers that had already used everything on the push up above the 23%. So once it broke back below, there just wasn't anything to help support the push up at all. Every break of these low those is going to be, particularly once we get back to the 38.55 level, that brief dip below again became very attractive for institutional buyers who like that range because a significant break and close below that 38.50 really lends itself more towards the 32 range, between 32 and 34. So that becomes a significant point of defense, you might want to say. From an NQ standpoint, almost identical from everything reading-wise, as well as breaking down to the new lows. And so it's just a consistency, even though it's probably a bit weaker on the NASDAQ in general. But you're reaching that point where a lot more of the tech stocks have suffered to where just a general regrouping. The euro has staved off utter disaster by capturing a lot of support, even though it's been very chaotic and sporadic. Definitely institutions trying to hold on to, and by that I mean mostly central governments really wanting to get the euro back up to 108 at least range or better, just to stabilize things, because as it gets down into this area, it really becomes precarious, because any little breakdown or difficulties in the eurozone, and you start the potential of breaking parity, and once that's broken, it becomes really difficult to stave off what you might want to call a run, not on the banks individually within the EU, but also from a capital standpoint, because then it becomes looking for some type of return and the prevention of the loss of capital, just in the sense that your euros are already, they talk about it only being an 8 or 10% decline from the start of the year, but going back a few more months before then, you were 125 to a euro. So from 125 down to 103, that's a significant decline when you're talking about a significant major block currency like that. From a gold standpoint, slight increase. Again, this is that debate that's taking place between the idea that the Fed has created just down the road a deflationary potential cycle developing, and some of those early on that callback here towards the end of April, once rates started rising significantly, it looked like there was a commitment from the Fed to at least clamp down on inflation by allowing the market declines, as well as squeezing some of the credit. Certainly has had enough of an impact. Well, and this is the expectation that some people are seeing within the gold thing, is they're expecting that peak inflation to have already printed. And so as long as that maintains itself, I think that gold will probably flounder a bit, at least from that, not to mention the bifurcation that took place once you banned Russia from gold trade net, which there's a significant element of it. From an oil standpoint, again, this is still problematic at 110. That doesn't help. What you're going to start to see, though, is inventory builds and stuff, simply because you're going to have regular individuals priced out, and that's going to create a drawdown in growth. And there's your double-edged sword to it. It's like you'll have stopped it to some degree, but unless you reverse the policies that have taken place over the last 2 years, they're not going to help. Of course, that flights treasuries, so that's why we've seen this spike back up from that 112 higher, people searching for safety within the week readings from the market, and that's lowering yield somewhat because of the influx, but still problematic from the standpoint of market strength because now you've got people who are more interested in protecting capital and staving off further reductions there. So that also limits the market's ability to respond, because before, when it really didn't matter and you were at major negative yields, there was plenty of credit. And like we talked about, once it started drying up, that's the reason we've seen the decline from a euros, just from Bitcoin, and unable to really hold on to anything. This is similar to the markets that have been still not horrible, still maintaining above that 28,000 level, which was the fill of that previous poverty extreme that we had from way back in the early rising over a year ago. And as long as it holds above that range, but if it breaks, then I think you're looking 24, 22 easy. So it'll be interesting to see if there's any additional market disruption, how much lower that goes. And I think that if you see the S&P dip below that 3,800 range, I think we'll probably see cryptos face similar problems. You can see they're very clean from the ETH, Ethereum, and that once it gets into those nodes, it's just very beautiful from a peak standpoint. Very easy to follow from that stand. And 50K. So we saw the softness build, and it was the early part of the morning, and then once it began, it just cascaded. And then the turnaround effect here was red was leading, but then Magenta got above. The white was still leading, so there was still some softness, but didn't take much for it to get that green DSC rising along with red. And once it broke above the negative 13, which was just below the 23, so once it got back up to the 23 and above the 23, looked solid as long as that Magenta was rising. And it confirmed definitely once we got over the white NDI. And that's where it ended off from a 5K standpoint. Early on, it's nice moves, but all positive extremes within that initial build, and that's what caused the initial fill. But once that happened, there really wasn't anything left to keep driving things, and that led to this beautiful cascade, and that was just clean lower all the way through until the later part of the day. And that's when we started to catch some supports within there, and they would fade back, but it kept building, and we weren't getting the real deep dip in any of those breakdowns below the negative 13. That's why when you're at that 50% range, tends to hold up fairly decent. So it was just a matter of once it moved back above 7.5 there, you had your P2s, P3s, and so those were in the higher level, and that led to some more of those pushes towards the 100%. And then the last one before the day ended, we had a brief little dip, went just below the 50% again, and strong turnaround from both MBI, the dark blue over the gray line, and Magenta over yellow, and off to the races it went. And that's how things finished. So all in all, really good action. These ranges again are terrific, and just a matter of following through with the directional reads that we get. So all in all, good action. I will continue to update you on the Skype chat. Trade well. We'll talk to you later.